All right, ready to dive deep. Today, it's the stock market. We're talking investing, the fundamentals, how it works, and most importantly, how to make some money.
Sounds good to me.
Our main source for this deep dive is a YouTube audiobook, something aimed at beginners, the dummies. But we're going way beyond the basics here. We're going to find those hidden gems, those little details that you wouldn't know just starting out.
I like that. And yet, this source is great at making investing feel less intimidating. You don't need to be some Wall Street hotshot.
Right. It breaks it down so anyone can get it. So let's start with the basics. Like, what even are stocks? I mean, is it just some fancy word for what my grandma makes on Sundays?
Uh-huh. Not quite.
Yeah.
Think of it this way. When you buy stock, you're basically buying a tiny little slice of ownership in a company.
Okay, so not a whole pot of grandma's stock, just a spoonful. Makes sense. But with all these companies out there, how do you even choose which slices to buy?
Well, there are different types of companies and different types of stocks. You've got your growth stocks. These are from companies that are, expanding quickly, like tech companies. They reinvest their profits back into the business.
I see.
And that makes them riskier, but with potentially higher returns. Then you have income stocks.
Okay.
Think companies that make everyday things, like toothpaste or laundry detergent.
Right. The essentials.
Exactly. They're more about paying dividends to their shareholders.
Dividends. So it's like a bonus just for owning the stock.
Yeah. It's a popular strategy, especially for folks looking for passive income. Now, this audiobook, it uses this analogy of a car dealership to explain the stock market. Like
Okay.
the place where buyers and sellers come to trade stocks, and the two main dealerships are the New York Stock Exchange, the traditional one, and the NASDAQ, which is all electronic.
So it's kind of like a giant auction house for company ownership. But with all this buying and selling going on, doesn't the market seem kind of chaotic? I mean, we hear about crashes and corrections and all that scary stuff all the time.
It can feel that way.
What causes all that?
Well, like any marketplace, the stock market reacts to all sorts of things.
Mm-hmm.
Short-term news can shake things up. Like if a company announces a bad product or, well, even something weird like a rat infestation in a restaurant.
Oh, yikes.
That can send prices tumbling. We call those drops corrections.
So those are like little potholes in the road, but what about the big crashes? Those seem way more serious.
Yeah, those are more like hitting a massive roadblock.
Oh, wow.
They're usually caused by bigger economic problems. And there's often a shift in, how investors are feeling. You might hear about bull and bear markets. Those describe those longer-term trends, whether people are feeling optimistic or pessimistic.
Okay, starting to make more sense now. So when these crashes, or even those smaller corrections, happen, what's the best way to deal with them? Should I be hitting that panic button? Selling everything?
Definitely not. The worst thing you can do is panic. The key is to stay calm and don't make decisions based on your emotions. In fact, a lot of experienced investors actually see those downturns as opportunities.
Oh, interesting.
There's this strategy called dollar cost averaging. It's basically where you invest the same amount of money regularly, no matter what the prices are doing. And that way, you actually end up buying more shares when the prices are low, which can really boost your returns over time.
So it's like buying those ingredients for grandma's stock on sale, more for your money.
Exactly.
Now, speaking of making money, there are actually a few ways to profit from stocks, right?
There are.
This audiobook mentions dividends, which we talked about a bit, but there's also this thing called capital gains.
You got it. Capital gains happen when you sell stock for more than you originally paid for it. So say you bought a share of a company for $50 and it goes up to $75. You just made a $25 profit per share.
So that's pretty straightforward. Buy low, sell high.
Exactly.
But what about those dividends? How does that system work?
Think of it like this. Dividends are a way for the company to share its profits with its shareholders. It's like getting a small rent payment for owning a piece of the building. Remember our analogy from earlier?
Oh, okay.
The company decides how much they pay out for each share, and they usually pay it out every quarter. Some companies even pay out monthly.
Wow, monthly income just from owning stocks. That's pretty cool.
It is.
But before we all run out to become dividend millionaires, are there any downsides to this whole thing?
Well, you always have to consider the risks with any investment. The important thing with dividend investing is to choose companies that are financially healthy and have a history of consistently paying out dividends.
So it's not just about chasing the highest dividend. It's about finding those reliable companies that can keep those payments coming.
You got it.
Gotcha. Now, before we get too deep into specific strategies, This audiobook points out some common mistakes that new investors make.
Yes. And those are really important to keep in mind. One big mistake is blindly following those financial gurus without doing your own research.
Yeah, it can be tempting to just trust someone who seems like they know what they're doing.
Oh, absolutely.
But it's like trusting a restaurant review from the owner of the place across the street.
Exactly. You always have to dig a little deeper. Everyone's got their own agenda, and what works for one person might not work for another. Another common mistake is, getting caught up in all the hype and thinking you're going to get rich overnight.
Yeah, that get-rich-quick mentality.
It just doesn't work that way. Investing takes patience and discipline. Think of it like a marathon, not a sprint. Slowing steady wins the race. Now, another thing that trips people up is giving up too early. The market's going to have its ups and downs.
Yeah.
It's easy to get discouraged when things aren't going your way.
Totally.
But having that long-term perspective is so important. Remember, investing is like planting seeds.
Ooh, I like that.
They're going to grow over time. You don't just rip them out of the ground the first time a storm comes along.
Right. Gotta let them grow. So we've talked about those common mistakes, but this audiobook also goes into some, straight up lies about investing. Things we often hear that just aren't true.
Oh, yeah, there are tons of those.
What are some of the big ones?
One of the biggest myths is that you need to be a millionaire to even start investing. The truth is, with online brokers and these things called fractional shares, you can get started with a pretty small amount of money.
So you don't need a vault full of gold bars just to dip your toes in the water.
Nope, not at all. Another misconception is that you need to be some financial genius to be successful.
Yeah.
Sure, it helps to know something, but you don't need a PhD in finance to get going.
I think that's a big barrier for a lot of people,
It is.
They think it's all super complicated and only the experts can understand it.
Yeah.
But this audiobook does a great job of simplifying things and breaking down those barriers. It really shows that anyone can learn the basics and start building their portfolio.
Absolutely.
So we busted a couple of those myths. What other investing lies are lurking out there that we should watch out for?
Well, there's this persistent myth that the market is just going to give you a guaranteed 7% return every year.
Right.
But the truth is, the market's unpredictable.
Yeah.
And what happened in the past doesn't mean it's going to happen again.
So no magic formulas, no guaranteed returns.
Nope.
Investing always has some risk.
Absolutely. And another myth is that investing is only for young people. But honestly, it's never too late to start.
Really?
Doesn't matter how old you are, the sooner you start, the more time your money has to grow.
So it's less about your age and more about just taking that first step.
Exactly.
Building those good financial habits.
Exactly. Now, this audiobook goes pretty deep on dividend investing. It even highlights some companies that are known for their dividends.
Okay, let's talk about those dividend all-stars. I'm always curious to hear about, specific companies that are known for their consistent payouts.
Well, one example is Nike. They've got this solid track record of delivering value to both, customers and shareholders. And they've been increasing their dividends pretty consistently.
So you can potentially profit from their success while rocking their latest sneakers.
Exactly.
I like it. Who else is on this dividend dream team?
You can't talk about dividends without mentioning PepsiCo.
Pepsi.
A lot of people think they just make sugary drinks, but they actually own a ton of different brands like Frito-Lay and Quaker Oats.
Oh, wow. So they're a snack empire.
Pretty much.
That's probably why they've been able to weather those economic storms and keep paying those dividends. What other companies caught your eye?
Realty Income is an interesting one. They're a REIT, a real estate investment trust. That means they own and manage properties that generate income.
Wait, so you're saying I can invest in real estate without having to be a landlord?
That's the beauty of REITs. And Realty Income is known for paying dividends monthly.
Monthly. That's pretty tempting. What other gems are hidden in this dividend treasure chest?
One company that a lot of people don't think about is Fastenal. They provide industrial and construction supplies, things businesses need in a bunch of different sectors.
So they're like the unsung heroes of the dividend world, quietly providing those nuts and bolts that keep things running.
Yeah, that's a great way to put it.
I like it.
They have this steady performance, and consistent dividend payments make them a pretty solid choice for long-term investors.
Okay, starting to see the appeal of this whole dividend investing thing.
Yeah.
It's about finding those companies that are reliable, profitable, and, willing to share their success with their shareholders.
Exactly. But the source also makes it clear that it's important to understand both the good and the bad about dividend investing, just like with any other investment strategy.
All right, let's weigh those scales then. What are the big advantages of focusing on dividends?
Well, dividends can give you a sense of stability and consistency, especially compared to capital gains, which can be a bit more unpredictable. Plus, you have the potential for growth in both the stock price and the dividend payments over time.
It's like a double whammy of financial goodness. But what about those potential downsides? Nothing's perfect, right?
Of course not. One thing to keep in mind is that companies can cut or even eliminate their dividend payments, especially if they're struggling financially.
That makes sense. So it's not a foolproof system. What else should we be aware of?
Another thing is that some companies might not increase their dividends as much as you'd like, so your income might not keep up with inflation.
I see. So it's super important to choose companies that have a history of increasing those dividends.
Yes. And companies that are, positioned for continued growth.
Gotcha. So thorough research and careful selection are key.
Absolutely. Now, one of the coolest things about dividend investing that this audiobook talks about is these things called DRS, dividend reinvestment plans.
DRPs, that sounds like something you get at a fancy coffee shop.
Uh-huh. Well, these DRPs are a powerful way to turbocharge your investment growth. They let you automatically reinvest those dividend payments back into buying more shares of the same company.
Ah, so those dividends are working overtime, making even more dividends. It's like a snowball effect.
Exactly. And by consistently reinvesting those dividends, you can really speed up the process of building wealth.
That's awesome. Now, before we move on, this audiobook has a few more standout companies that they think are worth considering for dividend investors.
They do.
Okay, let's hear about these dividend champs.
One that really stands out is Walmart. I mean, they're huge,
Yeah.
a global retail giant.
Right.
And they've been consistently paying and increasing their dividends for decades.
So it's like investing in, the everyday needs of millions of people around the world.
That's a great way to put it. Another company with a great dividend history is Lowe's.
Lowe's.
They're a leader in home improvement retail, and they've been delivering solid returns to investors for over 50 years.
As long as people keep fixing up their homes, Lowe's will be paying those dividends.
Pretty much.
Who else is on this dividend honor roll?
Well, we can't forget about the Golden Arches.
McDonald's.
Yeah, they might have faced some bumps in the road lately, but they're everywhere, and that brand is iconic. That makes them a pretty resilient dividend payer.
It's like owning a piece of that never-ending craving for Big Macs and fries.
Right.
What other companies are worth putting on our dividend watch list?
We're back to our steady performer, Fastenal. Providing those essential tools and equipment to businesses, that means they have a stable, predictable revenue stream.
Right, the unsung heroes, quietly delivering those consistent payouts year after year.
That's them. Now, moving beyond just dividend strategies, this audiobook goes into some more general investing mistakes we can all learn from.
Okay, let's hear about those pitfalls so we can steer clear. What's the first one on this list of investing no-nos? Okay, let's hear about those pitfalls so we can steer clear. What's the first one on this list of investing no-nos?
Well, the first one is falling for those financial gurus, the ones who promise you're going to get rich quick with their secret system.
Right.
It's tempting to think there's a shortcut to wealth, but the truth is, investing takes time and patience. Careful planning, too.
It's like those infomercials that say you'll get six-pack abs in 5 minutes a day. If it sounds too good to be true, it probably is.
Exactly. Always do your own research. Question those big promises, Remember that nobody can predict the market perfectly.
Solid advice. What other mistakes should we be looking out for?
Another trap is impatience. We live in a world of instant everything. But investing's a long game. It's like planting seeds that'll grow over time. You're not going to have a whole orchard overnight.
So it's more like tending a garden than flipping a switch.
That's a great way to put it.
It takes time, care, a little bit of faith.
Absolutely.
Yeah.
And another mistake, I think, is not enjoying the process. If you're constantly stressed about investing, maybe you need to switch things up.
Yeah, it's like forcing yourself to drink kale smoothies when you really want pizza. You're not going to stick with it if you hate it.
Exactly. Find an investment style that works for you, one that matches your personality and your goals. If you're more hands-off, look into index funds, ETFs. If you like researching and picking individual stocks, go for it. Just make sure it's something you actually enjoy.
So finding that balance where your passion and your financial goals, they kind of meet in the middle makes a lot of sense. What other investing traps should we be on the lookout for?
The audiobook talks a lot about not giving up too early. The market's going to have its ups and downs. It's totally normal to feel bummed when your portfolio takes a hit.
Hmm.
But those downturns, they're usually temporary.
Yeah. It's easy to get scared and just pull out when things get rough.
Right.
But it's in those tough times that we need to remember our long-term goals and stick with the plan.
Exactly. Think of it like a roller coaster. There will be ups, there will be downs, but you know you'll get off the ride eventually. And one more mistake to avoid, jumping into the market without a plan.
Oh, yeah. That's like going on a road trip with no map, no destination. You're just going to end up lost.
Exactly. Before you invest anything, figure out your goals. Are you saving for retirement, down payment on a house, early retirement? Once you have a clear roadmap, it'll help you make smarter decisions and stay focused.
So it's all about having a reason for your investments, not just throwing money at random stocks.
Right.
This audiobook also tackles those common investing myths that can hold people back. What are some of those misconceptions?
A big one is that you need to be a millionaire to start investing. But with online brokers and fractional shares, you can begin with a relatively small amount of money.
That's good news for a lot of people.
It is. It's about those good habits, even if you're starting small. Another myth is that you need to be an expert to invest. Sure, it helps to know some things, but you don't need a finance degree to get started. There are so many resources out there to help you learn.
It's encouraging to know that you don't have to be a Wall Street whiz to figure it all out.
You really don't.
What other myths did you find in this audiobook?
Well, there's that one about the market guaranteeing a 7% return every year. The truth is, the market's unpredictable. What happened in the past doesn't guarantee anything about the future.
So no guarantees, no shortcuts. It's all about understanding those risks, doing your homework, and investing for the long term.
Exactly. Another misconception is that investing is just too risky. All investments have some risk, sure, but just keeping your money in savings, where it loses value to inflation, that can be even riskier over time.
Right, it's like hiding your money under the mattress. You might feel safe, but it's slowly losing its value.
Exactly. And last but not least, there's the myth that you have to time the market perfectly to succeed. Trying to guess when the market's going up or down, that's really hard. Even the pros have trouble with that.
So instead of trying to predict the future, it's better to just invest consistently and ride out those ups and downs.
That's the best approach.
Eh.
Now, as we wrap up this deep dive, there are a few more nuggets of wisdom from the source that I wanted to highlight. They really stress the importance of diversifying your investments.
Don't put all your eggs in one basket.
That's the idea. Spread your investments out, different assets, different industries, to reduce your risk.
Makes sense. What other gems did you pick up from this audiobook?
Controlling your emotions. It's easy to get caught up in the fear and greed of the market, but that can lead to bad decisions.
Oh, yeah. We've all been there. That feeling when the market's up and then the dread when it crashes. How do you stay level-headed?
Have a plan and stick to it. Even when the market's going crazy, you're in it for the long haul.
It's like being the captain of your financial ship, even when the seas get rough. Great advice. Any other final words of wisdom?
The audiobook encourages people to think of investing as a journey. It's about learning, adapting, and enjoying the ride. It's about building wealth and achieving those goals.
I love that. It's not just about the numbers, it's about personal growth. Feeling empowered and creating a better future for yourself.
That's it.
Well, this has been a fantastic deep dive into stock market investing. We covered the basics, found some valuable insights, and busted those myths that can hold us back.
It's been fun.
And for our listeners, this is just the start of your investing adventure. There's always more to learn. So keep researching, exploring, and finding those nuggets of knowledge that'll help you achieve your financial dreams.
And always remember to invest wisely. Think long term.
Until next time, fellow knowledge seekers, happy investing.